Joining us on stage as moderator will be Achin, who is the Managing Partner, Strategic Advisory for Hotelivate. Achin heads the firm's strategic advisory practice, and his experience in the consulting field ranges from feasibility analysis to strategic consulting, both in India and internationally. Joining him on stage are Mr. Amit Nayak, Vice President and Executive Board Member of HAMA Middle East and Africa. We have Olivier Granet, Managing Partner and Co-CEO of Kasada Capital Management, and Mr. Pius Furlong, Senior Vice President, Hospitality at DAR Global.
Thank you. Okay, good morning, everybody, and hope you're having a good first half. My pleasure to be with the three fairly well-known individuals in the region, and I think it's highly unlikely that any of them require a more detailed introduction, but for the few who may not know Amit, Olivier, and Pius well enough, we're probably going to get started by just allowing them a couple of minutes each to share a little bit about what they do and who they represent. We'll start at the other corner. Pius, may I ask you to take a minute or two, just give a quick introduction about yourself and your organization?
Sure. My name is Pius Furlong. I'm in Dubai now just about 10 years. Previous to coming to Dubai, I was a hotel general manager back in Ireland. You can probably tell I'm from Ireland. I'm today with a global property developer called DAR Global. We have projects here in Dubai, Iraq, the US, Spain, Portugal. We're actually listed on the London Stock Exchange, and we're a subsidiary of a company called Dar Al Arkan. So we develop luxury hotel and residential projects or standalone residential projects worldwide. Branded hospitality or non-hospitality. So we've partnered with brands. We have a Dolce & Gabbana resort in the Maldives. And we have other projects with Marriott, with Accor, and other non-hospitality brands. So that's what we do.
Splendid. Thank you. Olivier, I doubt people don't know you here, but nevertheless.
Thank you for the opportunity. Very pleased to be back after spending a number of years in the region and based in Dubai, where I was with Accor as a CEO for Africa, Middle East. Great now to focus on Africa market and pleased to share some more info on the African market. So being the co-CEO and managing partner, and with my colleague David, we run a Kasada, which is a private equity real estate platform dedicated to hospitality in Africa market, and we have invested in 20 hotels on the last 3-4 years, different segments, different countries on the continent, which is sometimes challenging, but representing a lot of opportunities, and very pleased to discuss it today.
Thank you. And finally, Amit, again, probably needs no introduction, but let's go for it.
Thank you. You're being very kind. Amit Nayak, I lead the Hotel Owners Association for the region. We have owners of around 900 hotels as part of it. It's a very dynamic organization. We have led a lot of initiatives in the asset management space, not only within UAE, but within the region. We have a beautiful support system with a lot of the government entities as well as private. One of our fortes is we are the voice of reason. So this is where we encourage a lot of institutions and government players to work together, including Hotelivate, for that matter, is to come to the region to talk about the different initiatives that are being done for the region by individuals, Marjan being one of our partners, and so on and so forth. And we see a lot of friends who are members and partners within this community. Thank you.
Splendid. Thank you. And I'll take off from where you left that, Amit. In fact, one of the things that I'm sure you've noticed by now is rather unique about this panel is that the representation is fairly broad. Everything from North America to Europe to Middle East, GCC at large, Africa. So there's a lot of interplay that one could hopefully have from the learnings of this session on how things work in one market versus another, and what's really making GCC, MEA attractive. To that end, Amit, my first question to you, and we'll then take it to the others, is what are the key factors that are making GCC and the Middle East Africa regions attractive for investments in hospitality and real estate, say next over the 3 to 5 years?
I think what's always intriguing is the broad aspect of investments. So mostly multifamily offices do fantastically well, and that includes even the asset base as well. So what you see with the likes of DIFC, ADGM, when you bring investable capital in, you got a proper platform to divest it. Second, you see that there is only a degree of separation between you and the decision makers that can help you out, which does not happen anywhere else in the world. I think case in point is the way the city and the country came out of COVID. It's all done through a beautiful public-private partnership, which actually works. Third is the investable assets that are available. So whether it's the capital markets, whether it is real estate as a build, green field, what we saw in Marjan, where we are in the Palm, or it can be brownfield, which we have seen a lot of transactions that happen. Last but not the least is innovation. I think here you're allowed to innovate. I think there is very few countries globally where the minority is part of the decision-making process. And I think today, the way the world is growing and going about, that is the unique place where Middle East and Africa, especially I would say about UAE, is what is the core strength, and which helps us bring in all the capital from all over the world and actually take it out as well. So just to throw a number in, 2024 we did 55 billion of FDIs, dollars, non-oil. That means, and that is $33 billion that came in, $22 billion that was invested out. It's second only to the US, and for the size of where we are, I think that's a decent number.
That's an interesting and a rather unique number that you don't see in, like you rightly pointed out, most parts of the world. Moving on to you, Olivier. You very briefly touched upon Kasada and the fund and its Africa strategy over the last few years, I would say. Two parts to the question. One, the same I asked Amit. What are some of these key factors that are making Africa or sub-Saharan Africa, as I understand it, attractive for Kasada? Why was that part of the strategy? And secondly, are you looking to grow your footprint outside sub-Saharan Africa as well?
So the starting point for us was to be factual and understand what's the market in Africa and what is missing. The market is fragmented. 81% of the hotel owners on the African continent are owned by individual or family. It's underdeveloped, so if you look at the number of rooms per 1,000 inhabitants and you compare to every other market worldwide, you see a huge gap. It's from 1 to 10 at least. And also the international brands are underrepresented. And on top of that, the access to financing is more difficult than in a number of other markets. So this means that for Kasada, we see this as a need to bridge the gap and to establish a professional investment platform to be able to support some local or regional investor and to bridge the gap, to bring the skills, the resources, the financing that is needed, and then to collaborate with the large financial institution. That's what we do in order to transform the market and to be a game changer and to create from this situation to look at the opportunities and how we can grow and develop the market. And that's what we're doing, and that's also the reason why we believe that there is a potential interest for a number of other investors to look at opportunities in Africa market.
Pius, you briefly touched upon how Dar Global has investments literally globally, and you're listed also in the UK stock market. specific to the Middle East and African regions. Given that this is where the origins are from, this region, is there strong intent to continue investing in some markets over others in this part of the world? And if so, which ones? What are those factors that are attracting you?
Sure, it's a good question. So yeah, I mean, if we looked at the presentation earlier, actually, it reminded me of Palm Jumeirah. I mean, you only have to go back to 2003, where Dubai announced Palm Jumeirah. You know, a man-made island to much skepticism as being overly ambitious. But I mean, if we just look at Dubai today, it's achieving some of the highest prices per square foot for property in the world, and that's ahead of New York, that's ahead of London. So it's a very investor-friendly. You have investor-friendly policies. Most notably comes to mind would be the Golden Visa program. Has been fantastic. And unprecedented, I think, in the GCC region, unprecedented government commitment. Again, NEOM would come to mind, Diriyah Gate. Not least, we heard of Ras Al Khaimah, the commitment for that wind project. So that government commitment is very strong. Diriyah Gate today, if you look at Al Tufair, that region, that site, by 2030, as a historical site, it'll have close to 35, 40 luxury hotels. So it changes that region significantly. If you were an original investor on Palm Jumeirah, you'd have 10x on your investment today. And I think those new projects which are coming up are going to see the same returns in the future.
Thank you. Amit, closer to home here in the UAE, are there any specific tourism initiatives that come to mind that are enhancing the whole attractiveness quotient of investing in UAE?
I think in the UAE, we keep inventing ourselves all the time. When it comes to initiatives, I think the recent one was the Coolest Winter Campaign. Is basically showcasing that, you know, people go skiing, but then there is 10 other things to do within UAE. Whether you go to Hatta, you go to Ras Al Khaimah, you go to Fujairah, you go to Al Ain, there is 10 things that you can do differently. One thing that has come out very well with one of the hats that I wear is the culinary part of it. As Hoor mentioned even earlier during the showcasing of Dubai, the culinary ecosystem has grown as an initiative very strongly. And that has been exemplified by all the awards or the awarding authorities that never looked at this side of town earlier, be it Michelin, be it Goemio, be it 50 Best, and we always knew that we got very good food here. But it just showcased that the food that we enjoyed was at par, if not better, than some of the global hotspots from a culinary point of view. And I think that is an initiative that was driven strongly by the local tourism authorities for each of the cities, and as well as by the families and friends that actually believed in it. If you see in the hotel where we are, you got 5 or 6 beautiful culinary restaurants that never existed in this side of town. Or there is, for example, Oku that was there 20 years back somewhere, and now it's back, but it is full. Try getting a reservation anywhere else. Lastly would be, I think no conversation when it comes to initiatives can be, especially in the UAE, we cannot miss out on Emirates. I think Emirates makes this country into a global hub. I don't think so. This kind of airlift for the size that we are exists anywhere else. And that always comes up with new initiatives, new activations, where it actually brings in the numbers. You are looking at almost crossing 92 million passengers in the airport. I don't know any other city this size that can take this. So that also creates a lot of initiatives that support what we are doing here.
Thank you. Olivier, I'm going to switch the question, and maybe I'll ask all three of you gentlemen the same one, starting with you. And it's more macroeconomic in nature. For the markets where you've invested with your fund, I think we can all agree that there are some degrees of geopolitical uncertainties. Inflation comes into play. There is currency fluctuations to keep in mind and hedges of that nature. What are you doing and what can any other investor do in that region to mitigate some of these macroeconomic fundamentals?
Our strategy is to reach a critical size and to have a keyword is diversification. So this is how your portfolio is addressing different markets, different segments, and your flow of revenues. Just touching on F&B, it's what is the part of F&B, of co-working. We develop a lot of co-working in our properties. Other flow of revenues versus room revenue, and we consider that for us the target is probably to have 50% of the revenue which are not room revenue. And then on the top of what you can do with your portfolio, then this is where you need the skills and the expertise of professional investor, where you can address some of the risk, which is linked to you can hedge the currency, you can work with some financial instrument regarding inflation, you can work with some insurance. We work a lot with MIGA insurance from the World Bank. So you have today in the market, and that's a very important message, a number of tools that exist that can be operated in the right manner to address the risk. And therefore this risk-adjusted return concept is key. And we suffer in Africa, but I believe like in other emerging market, and it can be GCC, it can be India, it can be other market, from a risk perception which is not always reflecting what is really the fact and what happened if you do it in a professional and well-structured manner.
Thank you. Pius, do you have something to add on the same one?
Sure.
For any of your regions?
Yeah, I mean, obviously in terms of currency fluctuations, the GCC is pegged against the dollar. So any strategic partnership with government is going to be the way to go. I agree completely with Olivier. It's diversification. So whether you're investing in a condo hotel, or you can diversify in terms of the project that you invest in. So be it a condo hotel, branded, non-branded residence, hospitality or non-hospitality branded project. You could diversify regionally as well. I mean, what's on offer in terms of a project in Dubai is very different to that of Abu Dhabi, very different to that of what's in Oman. Maybe you're going to buy off-plan or you're going to buy ready. So off-plan, maybe you want to target 30-40% on your investment. But if you want to buy ready, you want 6 to 10% as a return. So very different in terms of what you can diversify in terms of the product, or regionally, or whether it's ready or off plan. Actually, it's very interesting what Olivier said about the brands are not represented. Actually, in Dubai, the brands are represented, and that's our challenge. So uniquely to Dubai, you can have 2, 3, 4 ultra luxury Four Seasons, and the city can take it. It can take multiple, Waldorf Astorias, multiple Ritz-Carltons. That's not unique to every city. What we find is if we want to do a Four Seasons today, it's already represented. It's restricted. If you want to do a Baccarat again today downtown, it's restricted. So a lot of those luxury brands are restricted. If you want to bring a new brand, say some brands that are not represented here today, maybe Auberger or Montage or Viceroy, maybe they're going to make a return. I hope they do. They will want to put the hotel flag first, which might not suit us. Then the hotel flag is put, and it's restricted. So it's difficult to find a hospitality brand. It's difficult to get a luxury hospitality brand. So we look to non-hospitality brands, and that's where we come. And they're also equally, so we look at we're engaged today with 90 hotel companies worldwide. I didn't know there were 90 hotel companies until I took this role, but there are. So it's trying to find a brand that would fit the project, be it hospitality or non-hospitality. So not that easy either.
Okay, thank you. Amit, obviously representing, being so higher up in the board of HAMA, you talk to a large base of owners/investors. And I don't think these challenges are alien to any of them. And I'm sure there's a few words of advice here that you could share.
I would share experiences, not advice. I think one of the key factors is about stress testing. One thing that we regularly do is stress test the existing brands versus benchmarking them among similar brands, looking at the P&Ls, the way it's structured, and be ready for risks. Because with everything that is happening across the market, I think COVID helped us do a hard reset on the way we managed assets. And I think that was one of the most interesting aspects that happened in the last 5-10 years, where it gave us an opportunity to look at what we could do better. And I think that aspect of it, if you keep carrying out at an asset every 3 years or every 2 years, depending on what is the cycle in the market, makes it much more interesting from an owner's perspective. Second, when it comes to brands, I think brands are your friends. They are, if anybody says that you can run without an operator, then you should try it. And we have seen a lot of them try it and then go back to an operator. And I think there is a lot of case studies in the market. The key factor is what relationship that you build with anything that you do, especially in the business, which is such a high-touch business of ours, the relationship that you build with the brand. And I think we have various examples where it works for you, but may not work for everybody else. But the reason it works for you is because of the relationship that you build. And scale definitely helps. So from a diversification point of view, if you have a holistic approach with the brands that you have, not having only 5-star luxury brands, which deviates, especially in a cyclic year, the summer, then you have no business. And you're fighting for the same business as a 3-star brand. So the diversification definitely helps.
Thank you. Olivier, we're going to shift gears. I think we can't be sitting in 2025 at any event and not at least touch upon the concept or the prospects and future of artificial intelligence and AI's impact on every business and every industry. I guess what I'd like to pose to the three of you gentlemen, starting with you, Olivier, is how is technology, including AI especially, reshaping investor strategies? We're still wearing the investor hat, but we want to see how that molds now that AI is in play.
There is a part that we know. So in terms of tools and technology, we see some really tremendous progress and it can start from the BMS system in the hotel that we deploy to then to go to the guest experience and to see how you can enhance the guest experience. And I have to say that Accor was probably one of the first one and used a concept at that time, which was not some comment talking about augmented hospitality. So what beyond the traditional experience and interaction, how you can go to the next level. And obviously all of this will evolve a lot with AI. But with a lot of humility, I have to say that the main part, we don't know. We don't know. So what we know is that it will be disruptive, that there will be winner, that there will be loser, and that in all this distribution story today and the mechanism, what is the position of the Booking, Expedia and all the OTAs versus the operators versus huge investment coming from the Google, Facebook and others. What we know is that they are working and investing a lot on this. As hotel owner and investor with a network of hotel, you have to admit that there is a certain gray area and you know that this is coming, you don't know exactly how. So for us the answer is let's keep the focus on what we can control, which is first of all in our industry the people. Let's make sure that we have the right people, that we are in the right location, with then the differentiation of the product, and let's be very open, curious to the market, test, innovate. That's what we like to do, and then see how the business will evolve.
Thank you. Pius, same one. Your thoughts on, there were, I'll add a quick thing. I think 2024 was probably the last year where there were still some naysayers about AI. I think that conversation is finally dead.
Yeah, we use it now today. We use it every day. So I think in the future it'll be used for investment strategies, pricing. It's interesting. You see Marriott as well. They have this one yield system they're going to use for their dynamic pricing, revenue optimization. I think that's the future as well. And it's flexing rates every 15 minutes, and you can feed other information into it, and it's learning. I absolutely believe it's the future. Yeah. You also have the blockchain, and you have tokenization. So if you look at Dubai Land Department today, 90% of the transactions are digital. So looking to do a real estate transaction in 30 minutes. I mean, this is phenomenal. Tokenization. I mean, that market at fractional ownership, that market is anticipated to be worth $4 billion to Dubai this year. So again, yeah, I think the future of AI is something we all need to keep up with. We don't know, as to Olivier's point.
Yeah, I think this topic on tokenization is a session in itself,
yes,
perhaps,
right,
coming in the future. Amit, would love your views on the same one as well, please.
I think it's something that we have to embrace. Hospitality as a business, I think we have learned from our mistakes. When it came to OTAs or the Airbnbs, we did not embrace it, and then we were fighting head over tails on what we should do next. One of the comments I made earlier was during World Government Summit, somebody mentioned about AI, and next time you need to hire someone, your HR will be your IT team. And I think that is a beautiful way to look at how or which direction we are moving in. Having said that, we are all in the pursuit of happiness, and we need time to do this. AI is going to give us more time to look at what we enjoy, and hospitality is all about that. So people will have more time to enjoy our hotels and restaurants there.
That's the silver lining, and it's a nice way to put it. I'll stick with you, Amit, and then we'll go down the order. Different question. We've heard a few times today already, and it's not unknown to all of us, luxury has done well in the UAE, and therefore investments continue to be driven in that direction more than most others. Would you agree with me, or otherwise, that it's probably time for a broader canvas, and that you should be seeing or will be seeing more investments in UAE in the budget mid-scale, upper mid-scale sector as well?
I think two factors to this. Demand drives supply. Everybody who is launching a new project, the demand is there and people are buying it. So I think it's a free market economy, and as long as the demand is there, the supply will grow in whichever segment it is there. Having said that, there are a lot of initiatives to support the question that are we becoming too expensive a city or a country where the traveler has a choice of where to travel. And if your hospitality experience is more than 50-60% of the cost of the holiday, then maybe that becomes a challenge by itself. And this is where, to mitigate this, there's a lot of push in the direction of making not only Dubai, but all the cities around it experiential, because people are more than happy to pay for the experience rather than just the stay. So to conclude, what I would say is that people have to look at what is your catchment, what is your target segment that you're looking at. You can't look at buying a land in downtown and say that I'm going to make it into a budget hotel, because it will not map out. And that's where I think people like you and your team are needed to advise and support. Ras Al Khaimah, you had land was available at a fraction of the cost what it's today, so the long-term view is also needed. So I think all these factors come into play when we are looking at that kind of an investment model.
Fully agree. In fact, what I'll take away also specific to your comment is there is no reason to believe that experiential hospitality must be associated with luxury only. Experiences can be had at all levels, and I fully agree there. Olivier, of the hotel portfolio that you've built with the help of your fund over the last few years, How does that split up? Is it mostly mid-scale, upper mid-scale? Do you have luxury as well? And what's the plan going forward in terms of future investments?
So today, we cover all segments. So again, diversification is key. So we go from economy with up to luxury. So from Ibis in our portfolio to our hotel in Cape Town, our flagship. So luxury exists on the African continent. So our hotel in Cape Town, Cape Grace, managed by Fairmont, is probably in terms of ADR one of the top performer worldwide in the Fairmont portfolio. So you can reach some hotel with ADR close to $2,000. So that's things that exist on the African continent. But then again, it's the need are on all segments, and this is back to the growing population, to the demand for travel, to the 1.5 billion traveling, and to the need to have to accommodate and to consider that hotels are part of the infrastructure that are needed, and this has to be supported by a vision. So I'm always telling to all the ministers when I'm sitting in different countries that what happened in Dubai is quite unique, and this was really from the initial discussion 15 years ago on what's the objective, how you want to bring additional visitors, what is needed, what you will propose to the guest, and how then you have the different segments. So the discussion on economy segment started a long time ago, even here in Dubai. And the good news is that we see now a number of other countries having also a priority to support the tourism sector and to have this transition in terms of economy to see the potential of the tourism sector on the GDP and on the employment. So, of course, this is Saudi here in the region, but I will say that on the African continent, if you take countries such as Morocco or even smaller ones such as, for example, Rwanda, you see some countries which are really focused and committed to support the development of the tourism sector in every segment, and also providing a lot of flexibility, which is a post-COVID event. So this is where your co-working, your extended stay is becoming something which is more and more requested by the travelers.
Splendid, thank you. And Pius, finally the same one to you. As Dar Global, are there preferred positioning that you guys like to invest in, or are you also mitigating across the board?
We will remain in that luxury segment. Without question, there's a rise in mid-scale, long stay. You see what NH are doing, no doubt about it. Co-living, serviced residences. One Zebil is a good example. But 80% of the projects being developed in branded projects that are being developed in Dubai today are luxury. And to the point Amit made earlier, if you're going to buy land downtown and develop it, if you're going to buy land on the Palm and develop it, you can't develop mid-scale, you can't develop economy, you just won't get your IRR on that. You know, it's just not, it's not possible, you know.
Absolutely.
So
no, fundamentals of ROI have to come first, of course. I'm going to try and take a few questions that the audience have been posing via the app as well. Interestingly, they're asking questions that are similar to what we had here, so we're all on the same page. Good to note. The question here, Amit, starting with you, is what should the target ROI and payback period be for a hotel in this region?
Okay, that's interesting. I think horses for causes. So you got, depends on your investment size, and if it's a REIT and a fund, it can be very different than an individual asset owner. On an average, if I have to have an opinion on this, is between 6 to 7 years is what the flavor is. Having said that, we have had assets that have turned around in 2 years as well. So it is what it is. In downtown at one point, if I talk about residential rental, was 6.4 months. So depends on how it goes. But on an average within the region, with at least, if you put a broad stroke on it, is between 6 to 7 years.
Okay, thanks. And Olivier, just curious for Kasada, what's the target IRR?
Yeah, The first thing interesting is that people are asking the question because in our market there is still a lack of liquidity and a lack of transparency, and therefore there is still a need to have the comparable and to have the market, which is a difference versus a lot of other markets. But as far as we're concerned, what we always communicate to our partner is the fact that we want to be a credible investor platform where we can deliver with stability of cash flow. We can target some return in the mid-teens, which reflects something which is realistic. So we have some project in which we can do more, but we have to be realistic on what is possible and to give a good downside protection. That's what we're doing.
Thank you. And Pius, if I may also extend this to you, you just explained that 80% of the portfolio's focus is in the luxury space. And as you're aware, luxury typically comes with an understanding that slightly lower IRRs are still acceptable because luxury takes time to give returns. Is it a fair assessment to say that Dark Global would therefore accept IRRs or ROI matrices that are taking a little bit longer to pay back?
I think this comes down to the brand that you appoint to that specific project. I don't think the IRR is going to change. We have a sort of a criteria around IRR or return on investment. It'll depend on the project. It'll depend on where the project is. We have a married residence project in Oman. It's going to take longer to sell. Such is the market. We've done a W residence project downtown, and it sold out in 45 days. So there's two considerations. It depends how long it's going to take for the project to sell, as well, because we don't want to be sitting on that, selling it for 18, 24 months. And the second criterion then, of course, is what price per square foot it's going to achieve.
Indeed. In fact, that goes into the next question we see there, and you've partially answered that. It says, which travel and tourism asset classes are seeing the most growth and appreciation? I think the branded resi space is something you just touched on, traditional hotels being the other, and hotel apartments, I guess, on sale and rental back being a third.
Yeah, and hotel, our preference in terms of hotel would be to do a condo hotel, so where we could sell all of the hotel units. So this is another, but again, a lot of the brands don't do that. Certainly none of the luxury brands would want to do that. So, I don't know.
Amit, anything to add on that one?
I think one of the interesting spaces, and we have seen this across in Middle East and Africa, is from an experiential point of view, is luxury high-end tents, camping. And I think those we have seen in this market achieving ADRs of $2,000-3,000 a night. And the beauty of this is that if you really drill down, the cost is very holistic in nature.
Indeed.
With the way the weather moves, so it is seasonal, but during those seasons of 6-7 months, you achieve a much higher ROI and it moves. So I think that is one ecotourism, if that's the right word for it. I think that is one asset class that we have seen across the region do very well.
Indeed. In fact, Olivier, I'll extend that to you. Africa also has some of the world's highest ADR charging, lowest footprint, ultra luxury tented resorts across brands. And is that a space of interest? I mean, Accor's sister company, Ennismore, has a brand called Our Habitas, which does beautifully in that space as well.
Habitas is a very interesting concept, and yeah, when we say ecotourism, it's the footprint, but then the price is not eco segment, and that corresponds to guests looking for an experience and having the possibility to be on site, which have to be protected, and that's something that we have several projects with Habitas in Africa on some destination where there is specific requirement to bring new type of guests on location where you cannot build your traditional luxury with all the footprint, and that's a very interesting development.
Thank you. And we've got just a few minutes left, so let's try and take that last question before I jump back to mine. Amit, with you first again, please. PPP, public-private partnerships, are they enticing? I wouldn't call UAE a developing market anymore. but for other regions, do you think PPP helps, and how?
100%. I think Dubai is a perfect example of that working. Saudi, with what they are doing, I think that is that's the only model that works, and it is something that you can see it across board there. And I think across the region, in developing your community and the whole ecosystem around it, I think that's the best model of getting into. And whichever country and city has created and developed it are the ones that you can see on the map.
Indeed.
Doing very well.
Indeed. Olivier, do you see that in some of the African nations? Is the government supportive, and are they collaborating? Ease of doing business, single window clearance, that kind of stuff?
It's one of the key question engaging for us in a country. We look at number of criteria from the macro to the local market, but we are approached by some government willing to, as a leading investment platform, say, yeah, please, we have some project, we'd like to invest in our country. But then for us is the question, okay, if we invest the hotel, are you investing in conference facilities? Or so it's what's the vision and what's the support? Is there something that we can develop in common? And that's for us a key criteria, where also the vision and what is communicated has to translate it in some execution, and that makes a lot of difference between countries. So for us, it's obviously a key criteria, and we are very positive because we see step by step this moving and understanding that hospitality is, for a number of countries, a critical part of the infrastructure for their capacity to exist on the map, to welcome people, and then for the benefit of the development of the population.
Thank you. And Pius, I'll take this to you as well. In the markets that you're investing in or continue to, how critical is it to partner with the government bodies and so forth from a public-private partnership standpoint?
Sure. We have partnered on our first master development in Oman. It's called Ada. And again, you can see this is the support that the development is getting. And I think the partnership is going to be very strong. Actually, the development is going to be very successful on account of it. This is the only project which we're doing in partnership with government.
Okay. I actually like that next question, and lightens the mood up a bit, guys. Let's be creative. Please give us your best advice, and there's a lot of investors here in the room. What is the white space? What's that next golden opportunity, Amit?
I think let me go back to what we spoke earlier as well, so it kind of connects with it. With the number of assets that through the association, through friends and family, and the day job that I have, that we touch, one, I always relate to it, which one is successful based on the number of calls I get during season for a booking. And in the last 2 years, the most calls I get is, can you get me a place in Hatta? We have got cabins, which are literally made out of containers. We have got igloos there. So you're not talking about the most upper upscale asset that exists. The most demand is for those places for the 6-7 months. So in my opinion, the white space within the region is these experiences, because you got beautiful deserts, you got beautiful beaches, and you don't need $100-200 million to build it.
Fully agree. What's your thought, Olivier? Irrespective of region or geography, what's a cool thing that the hospitality industry should be doing next?
If you are worried about over-tourism, or if you are concerned as a luxury segment and brands not available, then come to Africa, where you have a lot of white space for sure. But with also a trend which is really corresponding to what guests expect, and this is, I think, valid in every region, which is now, what is the impact of the lifestyle? And how do you incorporate this lifestyle as a lifestyle brand or a lifestyle component in the experience of the guest? And that's something which is, I believe, valid everywhere, which means that when you're an investor, the way you conceive your hotel has to evolve, the way where you allocate your square meter, where it's really impacting the 50 years of developing hotel for the people staying in the hotel versus how you make it attractive and the place to be for the people living around. That's a major shift.
Pius, white space?
White space. I mean, I think in Dubai, you're going to see, I don't know if this answers the question correctly, but I think you're going to see a shift from the lengthy hotel management agreements move to franchise. You're going to see a lot of that happening in the years to come as these contract terms come to an end. I think tokenization, I think that fractional ownership is a huge market. There's huge potential. You're going to see huge growth in that in a few years.
Yeah, I see you really liking that topic, and I can see why. Gentlemen, we have a minute left, so I'm going to go off script and ask you all three a question that we didn't have in mind, and we can quickly get a short answer. I'm feeling generous. I write all three of you a check for $100 million each, but you must invest it in hospitality. How are you going to spend your money?
I'm going to go with the topic that I have been speaking about is the white space or the ecotourism side of things with luxury camps across. I think that's where the money is going to go.
Thank you. Where are you putting the 100 million?
Diversification, you do some a part of your investment in a strategic location, key city, where you see the trend, the demographic and the population, and you're sure that's the right bet. And at the same time, you look at luxury, lifestyle, habitats, and other segments, and you try to create a good mix.
Pius, tokenized investments? Where are we going to put the 100 million?
I was going to say that, but I thought I can't bring it up a third time. No, sure. Look, I agree. I think if you're going to invest in Dubai, you're investing in luxury, ultra-luxury branded residence or hotel.
Lovely. And just in time, it says time's up. Gentlemen, it's been a privilege. Thank you for taking the time. And I'm hoping the audience found some value in this. Thank you all.